Yes, we can.
Can others also confirm?
Yes, I can.
I did not hear from everyone.
Maybe friends, yes, I can.
All right. Before we begin, I want to clarify that I don't want this to be all of you just your videos turned off and you guys are on mute and I'm talking to myself. If we have to do that, I can just record this in my free time and send you the videos and you guys can watch it on YouTube. But since we are doing it as a live session over Teams, it's better to keep it interactive. All right. I will also be um, recording this meeting and then um, uploading it to YouTube so you guys can revisit whenever needed. Just 1 second, let me send this to Ed. Okay. So we will be doing, let's turn on. Okay, someone already started. Okay, or Bhavesh, you started recording. So you can download and upload it to YouTube. I'll share the editor access with you.
Okay, fine.
So the purpose of this meeting is Wolfpack training. Some of you are already familiar with parts of it, like Chinonsu and Bhavesh. They have been working with us for quite some time now. But we thought it's still a good idea to have them on this call because they can share their perspective. If they have any questions on how to look at a certain thing, they can ask that. Or if they want us to cover something that I forgot to cover, they can bring that up and make Ianu and Hamdella familiar with with that concept. So we'll be doing this training in 4 parts. They will be around 1 to 1.5 hour sessions, and the breakdown would be in the first part, which is today. We'll be talking about Journal Wolfpack, how the general ledger of a company looks like, a chart of accounts, well groups, and how to access help within Wolfpack. In our second meeting, which is scheduled for next week, Tuesday, we will be diving into accounts payable, vendor invoices, how to pull data for a particular vendor for a given time duration, and other types of vendor reports. Bhavesh here has been doing the second part for quite some time. Um, so it will be good to have him. And then in the third training session, we will be looking at revenue and billing at the well level, owner level. We will be talking about what division of interest means. I hope you guys already talked about it. It's training session. JIB statements, joint interest billings, and various other types of reports that we can pull from Wolfpack and would be handy for both Ianu and Hamdallah. And then in our fourth session, we will be looking at AFE module, which I believe, I'm not sure if Chinonso has used it yet, but I guess Bhavesh has used it to some extent. Oh, no,
Yes.
okay, yeah. Okay, so if at any point you guys have any questions, you can raise your hand using the feature in the Teams application, and I'll stop there and we can discuss we can discuss that point. So let's get started. Anything before we move ahead? Yes, Mrs. Isa.
Yes. Do we get any refreshments for this training session?
Yes, you all can go to your kitchen and bring a bottle of water. I have mine ready since I'll be the one talking a lot. And you guys can get popcorn.
I thought you were going to be the ones who provide it. Well, that's okay.
Technology is not that advanced yet, but I'll tweet it on my new Threads account and tag Elon Musk.
Wow. Yeah.
Okay, cool. So, Hamdallah and Yanu, Hamdallah is from accounting background, but Yanu is not, right? But Yanu, Aziza must have shared that small accounting course with you. Have you completed it yet?
Yes, I have.
Okay, so you are familiar with the terms, what a general ledger means, what a balance sheet is, what is a profit loss statement, chart of accounts. So we don't need to define the basics. And Hamdela, Bhavesh, and Chinon, so three of them are already from um, they're already from the accounting background. So I believe they are good too. Okay. So first of all, I'm going to keep things start from the very basic. So it might be a bit boring for Bhavesh and Chinon. So uh, the accounting software that we use is called Wolfepak, and it is hosted on a cloud service. The cloud service is Microsoft's cloud platform, which is Microsoft Azure. You won't be doing anything on it, but it's important for you. It's good for you to understand how the whole ecosystem works. And so wherever we are sitting in the world, to access that application on the cloud, we use a third party application, and that application is called Citrix. So you are sitting in Nigeria, I'm sitting in India, Aziza is sitting in US, she's in Houston. So we are all over the world on our local computers, and we connect to the Citrix receiver, and the Citrix receiver connects us to the Microsoft Cloud platform. And on Microsoft Cloud platform is where the software is hosted. So I'll send both of you an email on how to set up Wolfepak on your computer. I'll actually show it also to you in a bit. So first thing you need to do is have this central application, the chain link, which is connecting your local computer to the cloud software. So you will install that software on your computers if it is not already installed. It's called Citrix Receiver. You will install the latest version. I have a instruction manual for you guys. So just follow those instructions step by step and you will be able to get there. And then once you install Citrix, then you will go to, okay, let's start sharing my screen. Then you will go to this cloud platform. Um, Wolfepak Anywhere, cloud.wolfepak.com. You can open it in any browser. Cloud.wolfepak.com. And since if you don't want to open it in your browser every time you access it, what you can do is in your Chrome, go here, and there's an option here under More Tools, and go to Create Shortcut. And you can create shortcut for this page on your desktop, which I have done over here. So now this thing appears on my desktop as Wolfepak Anywhere. So it looks like that I have a separate software installed on my computer, but it is not a separate software. This is basically a Google Chrome web page, which I have saved as an icon on my desktop. So I don't have to open Chrome every time and type in the website cloud.wolfepak.com and do all that things. So I just click on it. It asks me for my account. Um, One will be your prolinenergy.com email address account. And the reason you will see that here is because our prolinenergy.com domain is also hosted on the Microsoft Cloud platform. But since we are not trying to access a Proline thing, we are accessing Wolfepak. I will select this one. It is proland4@wolfpackcloud.com. Um, this particular account will be closed down pretty soon. So by next week, and this note is for Bhavesh and Chinonso also, and Aziza, I guess, already knows. So Proland 4, we will be deactivating it, and all of us will be using Proland 3 at wolfpackcloud.com. We'll share the email ID and password with you through email. And once you go in, my password is already entered, so it did not ask me to enter again, but it will ask you to enter your password for the first time. And then it will take you here to this web page. Now we have two different softwares hosted on the cloud. The first one is DocView. DocView is our invoice processing software. And second one is Pack Energy Accounting, which is Wolfpack. Um, Earlier, it used to be called Wolfpack. Now it is called Pack Energy Accounting, and Wolfpack is the mother company now, which has different softwares. So I'll select Pack Energy Accounting and click Open. Okay, looks like someone was already working on it. While it's opening, I'll give you a brief introduction about DocView. So DocView is our invoice processing software. All our vendors submit invoices through email. They send an email to invoices@prolandenergy.com. And from there, it gets uploaded into this software called DocView. And in that software, the invoice goes through different steps. The first step is the invoice indexing, where we index the invoice, like what is the name of the company, name of the vendor, total amount, date, PO number, invoice number, and date, details like that. And then the invoice goes to the operations manager to review the invoice and say yes or no, whether it is approved or not. And once the operations manager approves the invoice, then it flows from DocView into Pack Energy Accounting. And in Pack Energy Accounting software, we can see the approved invoices and we can pay them. Now, all of us don't need access to DocView, but if a training is required, we can schedule it later on. But today we will focus on Pack Energy Accounting. So I've clicked on Open and it will ask you for a user ID. So currently I'm going to use user ID ZZ, that is the Proland 4, but it will be discontinued and we will be using Proland 3 and the user ID will be shared with you via email. So enter that and click and press enter, then click OK. And now you are inside the Pack Energy accounting software. Now, the first thing it will ask you to do is it will ask you which company do you want to access. So like you have drop down menus in different applications in Wolfpack, instead of a drop down menu, we have this 3-dot icon, which basically acts as a drop down menu. So when you click on this 3-dot icon, a whole list will appear and it will show you all the different companies that we have. So Perry Petroleum is our primary mother company, which owns the mineral interest in our different assets. Then Proline Energy Resources is our operator company. ProLift Energy Solutions is our service provider. And then similarly, we have IV1 and IV2, which are our different companies. So the first step is to select which company do you want to access. I'm selecting Proline Energy Resources over here, but some of you might be working with other companies as well. For example, Chinonsu and Bhavesh, they work with ProLift 2 and Ianu, not Ianu. Hamdella will be working more actively on ProLift side. Ianu might be working for all these companies. There might be some things that she needs from Perry Petroleum, some things that she needs from IV1 and IV2 and so on. So let's look at Proline Energy Resources. I'll double click on that. So Pro 16 and then hit OK. And there we go. Now I'm inside the software. The software is a bit like data. It is actually not a bit like, it is like a database system. And if some of you are familiar with how database system works, this is RDBMS, Relational Database Management System. That is the technical side of the software. No need to know it. You just need to know how the software works. So the first thing that we are here under is General Ledger. So we all know what General Ledger is, and Chinonso, since she's in-house CPA, she can give us a brief introduction on what a General Ledger means. But before we dive into that, I want to show you some basic things around the software. There's an icon here at the bottom left, which is called Remote Assistance. That is when you call the company and you need help with some particular thing. They're not able to answer your question over phone or via email. Then they do a remote into your computer, and that's when this option is used. Another very handy feature that the software has is this help icon here at the top. So you click the help icon and you will see an option there called training videos. So once you click on the training videos, it will take you to this page. You can log in here again with your ProLen. Then 4 at wolfpackcloud.com. Okay, what's the password? Let's see. Okay, my email ID and user password is not working. Bhavesh, Chinonso, do you guys remember what the password is? Let's try remembering. Interesting. Okay. Anyway, coming back. So I'll look for the password and share it with you guys via email. But
The password dollar Proline 2023.
yeah, that's what I used. It did not work for some reason.
But
Is our
that's-
subscription covered with the videos? Because
Yes.
the videos might require another like subscription that we don't have.
No, it was always included.
Oh, okay.
Yeah, I have used it in the past. It was always included unless they have changed something. Okay, there you go. So I clicked on Pack Energy Help and it took me to this page. This has the entire index, and now I can click on any of these links. Okay, this one is the written instructions on how to do different things. And the training videos page, once we get the username and password, it's basically the same way. You will see the entire index here on the left side, and whatever you need help with, let's say I need help with accounts payable, then I need to know AP reports, payment reports. It will show me the instructions on how to do it and so on. Revenue billing. Yep, it explains the entire cycle and has some basic FAQ questions also. What does different thing means? And I can read through these instructions. But the videos are more user-friendly. Instead of reading through all these things, you can watch the video and it will be faster. But we'll be covering most of the things that we need to do. We will be covering them in these sections. So let's talk about chart of accounts. So Chinonso, can you give us a brief on what is chart of accounts and what is general ledger?
Okay, when we talk about chart of accounts, usually the way a company prepares its accounts, the way it wants to recognize transactions that come into its accounting financial statements. And most time they are to code this, especially when the company is using the software, they are supposed to code it in such a way that a particular number represents a particular transaction. I don't know if we got that. Do we understand that? Hello?
Hamdallah and Iana,
Yes, I
unmute
can.
yourself so that you can provide immediate response to questions.
Yes, I got that. Thank you.
Yan,
I
did you
heard
get
that.
that?
What do you mean by codes?
Most time when a company uses a software in passing its transaction, they're expected to use a code to be able to identify a particular transaction. Because most time this software might not understand you using letters. So they interface with numbers easily. So when you use those numbers, you attach it to a particular transaction. So you're able to flow very well. Because most of these things, they are using like technology. And when they are coding, they don't code with letters. They code mostly with letters. So when a company has a chart of accounts, the chart of account, just as I've said, it also show the way a company's financial statement is being prepared. And when you are using a software, you're expected to code each transactions so that the software you are using will be able to understand what the transaction is. Because when you are using letters, the software will not understand the letters you are using. But when you use code, you as a company, you already know that this 001 represents maybe payments, 002 represents receipts. So it is specific to companies. So it's the company to know that will know this is the code we want to use to represent this. All right. Like for instance, in ProLine now we have different codes for different transactions. Do we get that?
Yes, I can hear you. I get you.
So for general ledger, when we talk about general ledger, just like the word said, general, it is a ledger that shows all the transactions that a company have during an accounting period, both in terms of payments, both in terms of receipts, both in terms of your suppliers, both in terms of your debtors. Whatever transaction you have, it is a general ledger that have it. It is after the general ledger, you now start separating or segmenting them.
Okay. I have a comment. Would a good example of a chart of accounts be represented on the LOS, where on our LOS, if you scroll to the bottom, you start to see like different codes and you have like the explanation of the numbers. So for example, like 518 something could mean drilling costs.
Yeah.
Would that be it?
Yeah. So the software,
Okay.
why we are using those codes is because the software will not understand letters. The software will only understand the numbers.
Okay.
So thank you, Chinonso, and good one, Aziza. I would like to add one more thing here. So Hamdallah, and you guys saw in your accounting training session. So everything that we do in accounting has to boil down to the stage of a balance sheet, right? That is a goal, to get the balance sheet ultimately. And in your balance sheet, you have two sides, right? You have your assets, your liabilities, and After balance sheet comes your profit and loss statement, right? And then before balance sheet, and then before balance sheet comes your ledger. So all the transactions that you're doing on a day-to-day basis, they are recorded in your ledger. And now there are different types of transactions that you do, and we cannot, or if my balance sheet will become too long if I list down everything. If you remember what a basic balance sheet looks like, on both the sides, there are two main subheadings, and all your transactions need to fit into those buckets, right? So now how will you make your transactions in your ledger fit into those buckets? You will start categorizing your transactions. Like I bought a pen, I bought a pencil, I bought a notebook, I bought an eraser, I bought a sharpener. So I can't write all these things individually in my balance sheet, right? Then the purpose of my balance sheet will be destroyed. My balance sheet should be one small page at which I can take a quick look and get an idea of how my company is doing. So I'll categorize all these transactions, all these ledger entries into one bucket, and I'll call it office supplies, right? Um, so all your buying paper, pen, pencil, notebook, all that got categorized as office supplies. Now I might be buying office supplies today. I might be buying again day after tomorrow. I might be buying it next week. I might be buying again in a couple of weeks and so on. So now every time I buy office supplies, it's too much work to write office supplies, office supplies, office supplies. So instead of writing office supplies every time, I'll write 9101. So now I know, you know, we all know 9101 means office supplies. And in my profit and loss statement, I can see my 9101, which is office supplies. And then all the different categories will be further um, categorized into a bigger thing like an asset, a liability, a cash flow, and then further flow into your balance sheet. So everything when we are talking about accounting, don't think like an engineer, don't think like a geologist. When you're talking accounting, think that everything needs to go back to your balance sheet, ledger, your what do you call it? Ledger, profit loss statement, balance sheet. That's what an accountant, that's how you think like an accountant, and everything in accounting needs to go back to that. So like Aziza said, we have our own chart of accounts. So that is Proline's chart of accounts, because in oil and gas business, the type of transactions that you have, and hence the categories of transactions that you have, is different from what you would have in a service industry, in a marketing business, or let's say for a pharmaceutical company. Each company has its own. A pharmaceutical company might be buying ibuprofen every month, but an oil and gas company is not buying those medicines every month. So that's why each company prepares its own chart of accounts. There are some things that remain the same. The balance sheet remains the same for all the companies. Assets and liabilities, that remains the same for all the companies. But the subcategories in the profit loss statement and the ledger, they vary from company to company depending on the nature of the business. So let's first look at the Proline chart of accounts. Let's see if I have it here. Okay, what we were just talking about, there's a balance sheet, income statement, cash flow statement, your lease operating statement, which is basically your profit and loss statement. In oil and gas, we call it lease operating statement, and then your operational cash flow statement. So this is the main structure of a chart of accounts. And if you see, this is somewhat similar to what you see in a balance sheet. You have your assets, your liabilities, your equity, revenue, cost of sales, G&A expenses, lease operating statement accounts, and so on. So all my assets will be labeled as in the 1000 series. Liabilities will be labeled in 2000 series. Equity will be labeled in 3000 series. Revenue in 4000 series, and so on. So next time, if I say a code 4621, you will know that it is a revenue account. It is not an expense. It is what we receive. If I say 7500, you know that 7500 is not an income. It's a liability. It's an expense account, and so on. Then within assets, these are your subcategories, your cash equivalents, deposits, accounts payables, and so on. Under liabilities, these are your subcategories or the sub buckets. Then under your income account, these are your categories. The main ones that we will be looking at is oil sales, gas sales, and product sales. Condensate sales, we don't use condensate sales, we use oil sales. Condensate and oil can be used interchangeably. Then admin overhead, then miscellaneous other income, any shut-in royalty that we might be receiving because one of our wells is shut in and it's a responsibility of some other operator. Then there is interest income and so on. These are also your different income statement accounts. You'll be paying taxes, your marketing and other expenses. This will be your cost of sales. Then so on. So all of us will be using the word LOS a lot. And what LOS means is a lease operating statement, which is basically your profit loss statement, or you can call it an income statement. That statement basically shows you that as a company, how much production you had, which was your quantities, how much revenue you had. 1 second. Okay. Okay. Yeah. So when you're looking at a profit loss statement or an income statement of the company, let's see if you are the owner of the company or you are the CFO. What do you mainly want to know? You want to know how much was your production? How much revenue did you get from that production? What were your expenses? And then after deducting your expenses, what is your earning? What is the income that you're left with? And then what was the capital expenditure you did, and then some have your taxes also, and then your final net cash flow. So those are the standard categories that we have on our lease operating statement as well. The first one is the quantities, second one is the revenue. Then all this you see from number 4 to number 9, these are all your expenses. Royalty burden is a specific expense specific to oil and gas industry, which I believe you must have talked about in Aziza's training session on Tuesday. If not, let me know and we can talk about it now. And then taxes. Yeah.
Yeah, so Hamdallah can tell us about royalty burdens.
All right, Hamdallah, please go ahead.
The royalty burdens are the percentage of revenue, I think, cost-free paid to the owner of mineral rights that the company is getting their oil, gas, or salt water from, and they are gotten directly from the revenue. They were usually called 1/8 because before it was usually one of like 8 part of some of the pie that was usually given to the mineral rights owner, but now they've improved and they've learned, and now it's usually like about 12 to 15% of the revenue gotten on the oil.
All right, cool. Thanks.
Is it clear, Yanu? Are you clear about what royalty burden is?
So this first time I'm hearing royalty burden, but it's quite similar to the royalty interest that I learned from this during this
So-
week.
So yes, you are right. So let's say I am the one, you own royalty interest. So I pay royalty interest to you. So it's an income for you. It's an interest that you receive. But since I'm the one paying you, it's coming out of my pocket. It's a burden on me to pay you
Okay.
every month. So it's basically just a rephrased way. So it is the royalty amount that we pay out to the royalty owners. But since we are the ones paying it, it's a burden on us and we call it royalty burden.
Okay.
Because,
That makes
yeah,
sense.
okay. So let's move on. Okay, and then we have taxes, marketing, and other deducts, because obviously we need to pay our taxes. And there will be some marketing charges because we're using the pipeline companies. There are always marketing charges associated with taking your product to the market. And then there might be some other deductions from your revenue, which we will look into further detail as we progress through this slide. Then after your fifth one is the total net revenue to the working interest owners. That will be revenue minus royalty burden minus taxes, marketing, and other deducts. So that will be your net revenue that we will receive as a company. Just a heads up, sometimes I have this habit, I abbreviate everything. So sometimes even in my emails, I write number 3 and number 4 as RBTMO. So that doesn't mean anything technical, or that doesn't mean it's a new term. RBTMO is basically royalty, burden, taxes, marketing, and other deducts. So I just write it as RBTMO. And all of us have working together as a team for quite some time now. So we understand each other's abbreviations. So if in any of the emails or any of the communications you come across any such abbreviations and it doesn't make sense to you, feel free to reach out and ask. And then we have your 6, 7, 8, and 9, which are your basically operating expenses. And like in a standard chart of accounts or an income statement in a standard accounting, I'm sure all of us have studied in school that your expenses are of 2 categories. You have your reoccurring expenses and non-reoccurring expenses. Or if I talk in a more textbook way, it is called fixed expenses and variable expenses. And are you all familiar with what fixed and variable expenses are?
No.
All right. So who's going to help Yanu and explain to her what fixed and variable? Bhavesh, you can explain what fixed and variable expenses are.
Fixed expenses like subscription fees, variable expenses like office expenses. It might be up or down.
So thank you, Bhavesh. I'll pitch in a little bit. So Yanu, think of it this way. You live in your house, you get your Your water bill is fixed. Each month you have to pay your water bill. Your electricity bill is fixed. No matter whether you're in the house or not, whether you lived in the house for 20 days or 25 days this month or entire 30 days, on the 30th of the month, you will get your electricity bill, no matter what, right? Your electricity bill might be a little bit low, a little bit less. Maybe last month it was $100. This month it will be $80. But there will be an electricity bill on your table at the end of each month, no matter what. So that electricity bill is a fixed cost. You can't do anything about it. You have to pay, whether no matter how much money you're making, you have to pay electricity bill. Then there are some expenses which are variable expenses. I might have that expense this month, but I might not have that expense the next month. For example, let's say your water tank has started leaking. I'm sure we all have water tanks in our houses. We don't have it in the US, but in the rest of the world we do. It starts leaking. Now you need to get your water tank fixed. You got it fixed this month. Now it's fixed. You won't have to get it fixed again next month, right? It might break again, let's say 6 months or 10 months from now, but we will see when it breaks again. So that's a variable expense. You had it this month, but you may or may not have it next month. It depends, it varies. So in our company, in our perspective, instead of calling them fixed and variable expenses, we call them reoccurring and non-reoccurring expenses. And that I believe is self-explanatory, the meaning of two. Then your sum. Yeah, go ahead,
I
Chinonso.
think it's better we maintain the reoccurring and non-reoccurring. Because in accounting, if you say any expenses is fixed, it means that irrespective of your production, you have to make that payment. And it's usually constant. It doesn't go up or down. So when you say an expenses is variable, it's dependent on production. If you have a high production, you pay more. If you have a low production. But I think the non-reoccurring and reoccurring that we use in Proline is the best we could use for this point, because whether we the up and down doesn't affect the return. Reoccurring, we have to make sure every month we have that expenses. We don't know if it's high or low, but we know we must have it. The non-reoccurring is to come this month, it might not come next month. So I think the word for reoccurring and non-reoccurring is better, rather than bringing it in form of fixed and non-fixed, because fixed will have to come with production. When you say fixed, even if you don't produce, you must make that expenses, and usually a constant figure.
Okay, kind of like rent.
You get, yeah.
Good point, Chinonso. And that's why we don't use the word fixed and variable at Proline. We use the word reoccurring and non-reoccurring. And I believe it's clear to Ianu, and I believe Hamdella is already from accounting background, so she must be good with it. All right, so let's move. Then you have your total operating expenses, which is the sum of your reoccurring and non-reoccurring expenses. And then finally, you will have your earnings, which will be your total net revenue minus the total operating expenses. And this earnings is what you pay your tax on. So this is what we call EBITDA, EBITDAX. So Hamdella can explain to Ianu what EBITDA means. Ianu, do you already know what EBITDA means? Come on, some of these things were already in that accounting course, so it looks like you haven't completed it yet.
Ianu also did the LOS task, so yeah. I'm very sure the presentation, some people did mention the meaning of EBITDA, so she should be able to answer.
That's earning before is it income? I'm trying to remember the interest. Yes.
Interest.
The earning before interest, tax, remember D.
For Proline, because it's producing it's an oil and gas, it is earnings before interest and tax, depletion, amortization. Yeah. Then for non oil and gas, they just call it EBITDA, that's earning before interest and tax, amortization. There's no depletion.
Okay.
Yeah.
So this earnings is what you pay your income tax on. To break it down in simpler terms. And then you have your capex, and capex are like the name suggests, are the capital expenditures that you do. Let's say in your house, you want to buy a new sofa set, you want to buy a new dining table. So that is a major expense that you will do in your household.
And they usually last
So,
beyond the year.
yeah. So I'll share this presentation with all of you. Now, the next slides will show you the sub buckets under these major categories. So under revenue, we have oil sales, gas sales, product sales, and condensate sales. Under royalty burden, we have oil sales royalty, gas sales royalty, product sales royalty. Then similarly, these are the different types of taxes, marketing, and other deducts that we have. These are the different types of recurring expenses that we have. Your contract labor, saltwater disposal, electricity, chemical solvents, business-related expenses, and so on. Then each of these subcategories can again have subcategories. Like, for example, now contract labor means different things. It means your pumper and gauger, your production foreman, if you hired a consultant, if you hired a field supervisor, and so on. Similarly, your saltwater disposal, electricity, your planned maintenance. Your planned maintenance can again mean different things. It can mean maintenance on your production equipment, maintenance on your pump, maintenance on any kind of production unit, maintenance on generator, maintenance on compressor. Similarly, your business related expenses could mean different things, and so on. Then these are your non-recurring expenses, your materials and supplies, well project expenses, facility project expenses, and so on. And each one of them has subcategories. So well project expenses, these are all the subcategories. Facility project expenses, these are all the subcategories. And AFE project expenses, these are all the subcategories, and so on. Similarly, your CAPEX has different categories, and those categories also have a lot of more subcategories. So that is the Proline chart of accounts. Now coming back to Wolfepak, any questions on chart of accounts before we move on?
No.
Yes, I do. Sorry.
Okay,
I saw an
go ahead.
application, I didn't know the meaning of G&A. Like it's an
G&A
application.
expenses.
Yes.
Okay, Chinonso, would you like to help us here?
It's general admin.
Oh. Oh, okay. Thank you.
All right. Any other questions?
No, none for mind.
Okay, cool. So moving on. So we looked at the Proline chart of accounts. Now coming back to the software. So whenever you're using your software, you have this chart of accounts, your balance sheet, your income statement, profit loss statement, or some might call it, like we call it, lease operating statement. Now you can first prepare it at a company level, and then the company has different assets. We have an asset in East Texas, we have an asset in South Texas, and so on. So after the company level, I can prepare it on the asset level. I can generate a balance sheet only for East Texas, a balance sheet only for South Texas. Now, within East Texas, I may have sub-assets, or we call them fields. Um, and each field might have different wells in it. Uh, so we can prepare all these things, your balance sheet, your income statement, lease operating statement, profit loss statement. We can prepare it at the company level, then at the asset level for the whole group together. Then we can prepare it for the field level, and we can break it down to the single well level. We can break it down to the tiniest asset. Let's talk about in terms of houses. It's easier to understand. Let's say I am a real estate company and I own properties all across the country. So I can prepare a balance sheet for my company. Then I can prepare it on the state level. Then I can prepare it at the district level. Then within the district, I can prepare it for different areas, and all the way down, I can prepare it for those individual properties or those individual houses that I own. So I can prepare it for any level of granularity that I need. Now we said that it's hard to keep track of all the codes or subcategories in an alpha way. So we came up with a numeric system to code all those, to have a code for all those subcategories. Now, similar to that, we have a code assigned to each of our properties, and it is called Wolfepak Property Master Listing Code, WPPML. And it is a unique identification number, which is unique, as the name suggests, unique to each property that we own. And again, you will hear it very commonly when working with all of us. And you can get the Wolfepak Property Master Listing Code, or the WPPML, from the Perry-Well list. If you have already looked at the Perry-Well list, it's a code like 180223456. Now, when you tell me this code, I know this code is for Ashby number 1 well in East Texas. And so on, each property has an associated code. Now, there is meaning behind this code, and I will share it with you what the code means and how we came up with it. By the way, someone can someone help keep a track of all the things that I need to share with you after the meeting and send me an email? So I need to share the PowerPoint slides that I just sent you. Chinonso, can you help me with that? All the things that we need to share with the team. So first would be the LOS slides that I just showed. Then second would be the meaning of WPPML. Then I need to share the document showing how to set up Wolfepak on their own computers using Citrix. Then I need to share the username and password for Wolfepak. Those are the 5 things that I need to share so far. So Chinonso will prepare that list and email it to us after the meeting. And then it will be my responsibility to share the actual data with all of you. Okay, thank you, Chinonso. So coming back, this is the Perry-Well list. And in this first column, you can see the name of our wells. And in the second column, we call it WPPML, but in standard database management, it is called UID, Unique Identification Number. So the way it works is the first 2 digits in the number 18, that is the year in which we acquired that particular asset. So 18 means we bought this asset in 2018. Then 02 means the month that we acquired in. So 02 is February. So we acquired Brass Branch number 9 in February of 2018. Then 4 means the acquisition ID. It was the 4th acquisition in that year. Then 4 means your district, then 1 means whether it is an oil well or a gas well, and so on. So each digit in this unique identification number means something, and we'll share that information with you after the meeting. So coming back here, this is my journal ledger. So what I most commonly use here is this view trend. So I'll click on view trend, double click anywhere. Now I can see the journal ledger entries for any particular subcategory. Let's say I want to see it for January 2023. Oops. To May 31st, 2023. Okay. Now I'll click again on those 3 dots which work as the drop down. Now what code do I want to look at? Let's look at our gas sales. So this is my entire chart of accounts that I'm looking at right now. So I can scroll down and find my gas sales, or what I can do is I can type it here at the top in the search bar where it says contains. I can write gas sales here and press enter, and it will show me my subcategories associated with gas sales. So instead, I will select this one, 9621. That is my gas sales. Now it will, I want to see it for a particular asset. So that is called sub account. So I'll again click on these 3 dots, which work as the drop down menu, and you will see a list of all our assets. So you will see assets and also the different groups like this. There's a group for East Texas, a group for South Texas, and different subgroups. So I can scroll through this whole list and keep searching for the well that I'm looking for, or I can just come here at the top and type in the name of the well that I want to look at. So let's look at Briscoe Nunley. Okay, the whole name, let's say Nunley. Okay, there you go. So I want to look at Briscoe Nunley GU1H. I'll double click on that. And there you go. It will show me the journal ledger for Briscoe Nunley gas sales 9621 from January 1st of 2023 to May 31st of 2023. So the first is effective date. I can see in January 2023, we made $3,200. In February, we made $2,700. March, we made $2,600, and so on. Quantity is how much amount of gas we sold. Description, that is the name of the pipeline that we sold gas to, and so on. Now let's see, I want to dive deeper into any particular ledger entry. I can double click on that ledger entry and it will show me more details about that. So this was for revenue. Let's look at one of the expenses also. Let's look at compression. How much money did we sell on compression? So I'll select compression. So looks like in the entire year of 2023 till May 2023, we had a compressor on this particular asset in January, and we paid $3,350. So, oops, wrong button. Yeah, need to make this transparent. Okay, this is better. Okay. I can double click on that, and then it will show me the name of the company was CSI Compresco. Now I want to look at an actual invoice when I paid this $3,350. Now here you will see there's a column called image, and it says true. So I'll scroll to the right. Okay. Let's click on this image. Right click on that and click on view document. And there is your $3,300 invoice that you paid on this well in the month of January 2023. So similarly, using this particular view trend option, what we just looked at is for any given time duration, we can look at the ledger entry for all our categories and subcategories. And if we need to dive into more detail, we can actually pull out the invoices if it was an expense or our revenue statement if it was a revenue account. Any questions so far? Once we get to the
Yes.
accounts payable module,
I have a
we will be
question.
sorry, 1 second.
Mhm.
Once we get to the accounts payable module, we will be able to look at different ways to view the same data. But right now, we just learned how to look at different general ledger entries and dive into more detail into that. Okay, now let's get to
Okay.
your question.
All right, thank you. So with the trend detail analysis you just said to us is super helpful, but my question is still going to be on the trend. So we are trying to locate a particular charge on electricity for the Edrington, the saltwater disposal well, for a particular month. So the amount is in Wolfepak, but we need the invoice that was backed into it. And then you just showed us an example of compression. So I was going to ask if we could do a quick exercise where Ianu tells you where to click and what to do to get to that.
Sure, let's do it. So,
right, awesome.
Ianu, can you guide me what we need to search for?
Okay, I think we're supposed to change the account code. Oh, is it from fresh? Okay.
The saltwater disposal is the number 31, I think.
Okay. I'm just opening another document meanwhile that I need to share with everyone after this.
Oh, okay.
Okay.
It takes some time to open. So, oh, come on. Okay. While it's loading, we need to look at Edrington saltwater disposal. So first, let's change our sub account. And we are looking for Edrington. Those are all the Edringtons that we have. So we are looking for this 31. One, SWD, saltwater disposal. And we are looking for electricity. So let's search for the electricity code. Okay, I'm not sure which one is currently active. Let's go with this one, 9004, because that seems like my um, reoccurring expense code. 9200 looks like they come further down the chart of accounts. And what time duration are we looking at?
2018, January 2018 to April 2018.
Just give me. Sorry about that. Okay, we are looking at what time duration, Yani? You're on mute.
Sorry, that's 1st of January 2018 to 31st April 2018. 13, sorry.
Okay, looks like there was no transaction under this code. So let's look at.
Can we do the whole of 2018?
Okay. No transactions. Let's see if it was charged to a different electricity code. Nope.
Can we check any of the? Okay.
Let's check
2018.
the clearing account. Okay, let's increase my time duration.
Okay, so bad. The electricity was not charged to the saltwater disposal. It was charged to the 32 and the 33.
Okay, so till 2017, it was getting charged to the saltwater disposal. It looks like
Okay.
in 2018, we changed it. So let's look at 32. Okay, yeah, in 32 in 2018, April, we had a charge. And let's look at 33. 33 also, April 2018, we had a charge.
So we had it with Nueces Electric, then we had it with Hugo Palala.
Yep. So this particular entry, it looks like it was an uploaded entry instead of an invoice entry. So that's why the document is missing. So for this particular one, what I would recommend is going to a Y-Drive and look at the saltwater disposal folder for this particular month. Let's see if Sonic Wall works properly. So that's another side note for the rest of the team. We changed our company process after 2018. So what we used to do is up till 2018, instead of entering all our saltwater disposal invoices into our system, we used to compile them into one big PDF file and generate an import template and import that template into Wolfpack. So instead of seeing individual general ledger entries, we used to do a one big group general ledger entry. And the goal was to save time. So Aziza, are we looking for this particular invoice?
Yes, we
Okay.
are.
Saltwater disposal. Okay, this folder goes till 2018 November. April. Okay, that's 2019.
Okay, so we only have up until June, as far back as
Yeah.
June here.
It must be somewhere here. We should be able to find it. Or we can go through Miss Penny's.
Okay, so that's 2018
files.
March in
Which one?
archive. I saw it 2018 March in archive. Then 2018 10/4. That's April. Oh no, that's for August.
This is that saltwater disposal. Yeah, this is also saltwater disposal. My bad. We're looking for electricity.
We're looking for electricity.
Yeah.
Yeah, it just occurred to me as well.
There you go. 2018 April. Oh, there were like 3 or 4 different uploads in April that year.
Okay.
Okay, not this one. What's our Wolfpack number? We're looking for 16. This is 18. It looks like it's not here. Do we know the name of the vendor?
No, that's one of the things we're trying to get. So in the Wolfepak, you have Hugo Palala. So I'm guessing that's the
Yes.
name of the vendor. It used to
Okay.
be Nuices Electric before.
Let's do one thing. Once we
Mhm.
finish this, we'll come
Mhm.
back to this.
Okay.
And we can look at we can search through vendor. That's a different
All right.
module. So let's
Oh,
finish
okay.
this first and come back to
All
it.
right, cool. Sounds good. But
Okay.
like you already showed us the method, the way to find it if we're looking for any of the PDFs that come with general ledger uploads, which was
Right.
what I wanted. Yeah, I wanted
Okay.
to demonstrate if Ian got it. So thank you.
Okay. You're welcome. Okay, so that's one thing. So we talked about General Wolfepak, General Ledger Reports, Chart of Accounts. We talked about how to access help. Now, next part that I want to do in today's session is talk about our facilities, how different facilities are set up, and there will be some terms which all of us will be hearing, will be using and hearing a lot, especially when we are talking to the field guys. So I have a diagram for that, which might still be opening. Let's see. Um, uh, okay, while that's opening, that's the last thing that I want to show today. And it's still opening. So let's go ahead and do the accounts payable thing. So it's a different module. You come here on the top, right next to General Ledger. You will see there are different modules that we have here. So let's go to accounts payable. And now what we need to do is we need to look for invoices by vendor. So when we are under accounts payable, when we are under general ledger, our primary identification that we are uh, that we are using to look for different data points is our property ID. When we are under accounts payable, obviously payable means we are paying out to different vendors. So the primary ID that we will be, just 1 second, guys. Hello. Yeah, sorry about that. So I was saying that when we are under general ledger, the primary category that we were using to look up for different data points was the property ID. When we are under accounts payable, as the name suggests, since we are the one paying out money to different vendors, the primary uh, identifier that we will be using to look for different data points will be our vendor names. Similarly, when we are under revenue and billing, we are billing out to different owners. So the primary identifier that we will be using to look for any data will be our owner ID or the owner name. But under revenue and billing, since we are paying to different owners for different assets, so we can also use the owner name as a primary identifier, and we can also use your asset ID or the asset name as the primary identifier. So that is the difference I wanted to highlight between these different modules. And now, depending on the data that you're looking for, you can decide which module you want to go into. So we just went into the general ledger and we were unsuccessful, but we identified the name of two possible vendors that we used for in that particular year for that particular service. And now we can search, we want to search through vendors. So the module that we will go for will be accounts payable. Now under accounts payable, you can go to reports and you can generate PDF reports. But what I personally like to do is before generating a PDF report for something, I like to do a quick search. I like to view my data. And if I find what I was looking for, then I save it in a report format. And we can save our reports in both PDF and Excel format. So under master file maintenance, let's go to sub account. Now, again, like I just said, when we were in the general ledger, my primary identifier was your well name or the asset name. So when you click, if you remember under general ledger, when I clicked on sub account, it showed me a list of all our assets. But now I'm in accounts payable module. Now my sub account is all my vendors. Similarly, when you go to your revenue billing, your sub account will be the name of all your owners. So here under sub account, at the bottom, you will see there's an option called find. So let's click on find. Subtable, you don't need to change anything under here because it's already set to vendors since we're under accounts payable. I'll go to account, sub account, click on this drop down menu. And what was the name of the vendor? Hello?
Hugo Palala. Hugo is Hugo. Yes.
Okay, there you go. So I'll select that vendor. Now, these are the details of the vendor. At the bottom here, you will see there's an option called invoice history. We can click on that. And looks like there was one invoice in April of 2018. Let's see if we have the PDF file for it. It was an upload. We have everything but the invoice. No,
And it seems like there were 4 different wells.
Right. Yeah, that's what it looks like. It was an allocation. Let's look for nuances also. Let's see if we find something there.
Okay.
Hugo Palala might be a service guide that we used. So maybe that's why it got allocated to everyone. So this is Nueces Electric Cooperative, right?
Yes.
Invoice history. Okay, 2017. Okay, we don't have anything for Nueces in 2018. Yeah, no charge in 2018. So the only charge for Edrington in 2018 was Hugo Palala.
Can we get the document for Nueces for 2017?
Yeah, sure.
Can we look at it?
Let's see. I don't see the PDF file here. I see it for 2020. Yeah, I don't see it here.
Okay.
Yeah, it's not.
Okay, so in cases where like electricity bills where we use credit cards to pay back in like 18, unlike now that we would have invoices generated for receipts. So back then, everything would just be an Excel upload, right?
Correct, yes.
Okay.
Yeah, so we might have to search the Y drive.
All right, that's fine. Yeah.
We can give her access to Miss Penny's folder, But I believe it was always Ed who was working on electricity, but I can still give access to Miss Penny's folder to Yani, and she can help us go through it.
Okay.
Okay. All right. What else? Yep, this is what I was looking for. Okay, so this is the last part that I um, want to share, and it's slightly more on the technical side, or not exactly technical, but more intrinsic to the oil and gas industry. So we all say well, and see. So we say well and we say field. So what do you guys understand when we say well and field? Any rough ideas, Yanu and Hamdallah? Yeah, go ahead.
So I think fields are like the property, then wells are like the holes we drill, like oil from we get oil from a well, and the field is like the entire property, like the entire land.
Okay. Yanu, any thoughts?
Wells are drilled into through the ground to get access.
Right.
I think we lost Yana there. Yana, we can't hear you.
Looks like we lost Yanu. Okay, Yani, are you back?
Yes.
Okay.
Sorry.
So, and in this today's meeting also have talked about, I've used the word field, asset, group, and so on. So, like I said, you can make your balance sheet on a national level, then on the state level, then district level, then in area level. So when we say field, let's say this is this whole thing is your state, and this particular region, I drilled 3, 4, 2, or basically more than one well or even one well. Now this group of 4 wells together, this is what I called, or what we call field. This is a field level. So a field may have different wells within it, and then this is your well. And well is actually what you drill. This is your above surface, and below surface, this well is what actually goes into the ground and how you produce oil and gas out of it. Now, there's a regulatory body called American Petroleum Institute. And similar to how we have given unique identification numbers to our properties within the company, what the API Institute did is, like, Proline has its own UID system, Chevron may have its own UID system, Exxon may have its own UID system, and so on. So American Petroleum Institute decided to come up with a standard way, a standard unique identification numbers for all the companies, for all the wells in the world. And that identification number is called API number, what you must have seen um, in your Perry-well list. And similar to our Wolfepak number, API number also has a meaning. Each digit means something. So like 42 means the state of Texas, 479 means what region in Texas, and similarly so on. 38440 means something else. You can just Google meaning of API number and it will tell you what each of these digits mean. So when we talk about field, this is that group of wells together is what we call field. Um, and so on. And then when you drill a well, sometimes not sometimes you have to drill to 5,000 feet, sometimes 8,000 feet, 10,000 feet, and sometimes you get your hydrocarbons right at 2,000 feet and so on. So those layers from which we get our hydrocarbons from, those are our producing formations or our producing layers, since those are the ones from where we are getting oil and gas. From where we are getting oil and gas to the surface. Now, mostly what happens is one well produces from one single formation, but sometimes some wells produce from different formations. So like this particular well is producing from formation A, from formation B, and so on. So the well that is drilled into the ground, we gave it a unique identification number and we called it the API. Now we need to give a unique identification number to these formations also. And the UID for these formations, that is called the lease number. So sometimes you will hear us say what is the lease number of the well and what is the API number of the well. So API number is for the well bore that is being drilled into the ground, and lease number is for the formation from which the hydrocarbon is being produced. So your gas lease numbers are usually 6-digit numbers, and your oil lease numbers are usually 5-digit numbers. And it is a standard practice in oil and gas industry to, if you want to use colors, your oil is in green color and your gas is in red color. Now, sometimes what happens, since it's the ground and Ianu is a geologist, so she knows that what formation we have here in, let's say I'm sitting here in India in my house, that formation might be there even 10 kilometers or 10 miles south of me or 10 miles north of me at a different depth. In my house, that same formation is at 5,000 feet, but 10 kilometers from my house, that same formation might be at 12,000 feet or 8,000 feet, or it could be exactly same at 10,000 feet. It really depends on the geology of the area. So in this case, I have a well drilled over here and another well drilled over here. So the API numbers for these two wells will be different because they're drilled at different locations. But there is a possibility that the lease number might be the same, not necessarily. I'm telling it, I'm simplifying it for you. There are other complications that go into it when assigning a lease number to a well. But one particular example, sometimes you might see that the API numbers are different, but they are producing from the same lease number. So this is one example of that. And sometimes you might see, and Ian, you might know what syncline and anticline are. Right, Ian? So maybe you can include it in your next week's roundtable when you will be telling everyone about the geological thing. So tell everyone about synclines and anticlines also.
Okay.
You won't need it. It's just a technical thing. Good to know for our accounting folks also. So since Yani is from geological background, she can explain it better than I will, I believe. Okay, so let's continue.
All right.
Now, there might be some cases where you see, yeah, we just talked about two different API numbers, but the lease number was the same. And sometimes we might say that one single well has multiple API numbers, that is this case we talked about, formation A, formation B, well is producing from two different layers. Then another thing that you will come across in the peri-well list is the well status column. We have producing TA, NPZ, PZ, and so on. So if you go to the summary tab of the peri-well list, the definitions tab of the peri-well list, you will see the definition of these abbreviations and what they mean. But to give you a quick overview, your NPZ means non-producing zone. We just looked at that a single well bore can be producing from two different formations. So if both the formations or both the zones, both the layers are producing, we call them PP, producing, or we um, we can just call it producing, but in Proline, we termed them as PP. PP means there are two different formations and both of them are producing. But there could be another case if you look here on the right-hand side, your formation B is producing, but your formation A is not producing. So in this case, I will call my least number for my formation B, I will call it PP as producing. And least number for my formation A, I will call it as NPZ, non-producing zone. And so on. I won't dive into. So just a quick, this big well bore, that is your casing. And inside your casing, you insert a smaller pipe, and that pipe is what you call tubing. And then on the surface of on the surface, you don't just have a well, you have different production equipment there. Because when your hydrocarbon is produced from the ground, it is a mixture of both. It's a mixture of oil, gas, water, and other sediments also. And that mixture gets produced at the surface. So the first thing is from the wellhead, that mixture flows into a separator where you separate your oil, gas, water, and other sediments into separate things. Your gas flows into the pipeline and is sold, and your oil flows into your tanks. And when your tanks get full, you call a company to come bring out their truck to the field and pick up that oil from your tanks and sell it off. And there are some other equipments also on the surface, which you don't need to know, gets more technical, like your heater treater, your Christmas tree, and so on. Your Christmas tree is basically the wellhead. Another term that you might hear a lot while working at Proline is your dehydrator. Sometimes what happens is your natural gas is wet, it has higher water content. So you basically, or it may also have some other components that are not necessarily required for the pipeline. So you reduce the proportion of those components from your natural gas through an equipment called dehydrator. And so on. There are a lot of other equipments. We don't need to get into that. Yeah. So one thing is, let's say you have this particular field, and you have a well here. So what happens is your gas, let's say the pipeline is here, your gas and well is here. Let's say there is another well here. Now this is producing oil, gas, and water. So what we will do is your gas, we will flow it into a separate pipeline and it comes here. Then your oil goes here into the tanks, and your water also goes with oil, and it gets stored into these tanks. And when since oil and water had different density, they will get separated out. Oil will be on top, water will be on the bottom, and your truck will come and take this oil and sell it. And another truck will come that will take out the water and dispose it, because no one wants to pay for the water. So when the company comes to pick up oil, they pay us. They are the oil haulers. That is a term that you might hear, that you will hear a lot in your Monday operations meeting. And then that water that gets accumulated in these tanks, that water is called salt water disposal because it's salty in nature. And we need to dispose that water off. So that company brings another truck, picks up this salt water and goes sells it off, and that's called SWD. And that's what we just saw when we were looking for invoices, your SWD invoices. And you will also see saltwater disposal as an expense on your lease operating statement. Now, talking about gas, I'm sure we have all studied basic science. Gas flows from high pressure to low pressure. And let's say this pipeline is at 500 pounds pressure, and your wellhead pressure is usually low. This one was at, let's say, 50, and this one, let's say, was at 100. And we combined both of them at this particular point. Define the principles of physics. Let's say this is, now here I have 150 psi, right? Now I need to flow this gas into this big major pipeline that is eventually going to the refinery. So my gas will not flow from 150 psi to 500 psi. So what we do is we put a compressor here and feed this 150 psi gas into this compressor inlet, and the outlet of this compressor is, let's say, 600 psi. Now my pressure is higher at this point, and over here it's 500 psi. So gas flows from high pressure to low pressure. So my gas will now flow into this pipeline by itself after the compressor, and from here it will go to the refinery. So that is why some places we have compressors and some places we don't have compressors, and we pay the compressor companies because most of the times we rent the compressors from different companies. In some locations at some assets, we own our compressors because it made more economical sense than to pay rent every month. Now, similarly, there will be a dehydrator here because you can't put too much water content in your pipeline and so on. It keeps getting technical. But I wanted to give you guys a brief overview because these are the things you will be hearing very commonly when you will be sitting in meetings and when all those invoices come to your table. Okay, any questions so far?
None for me.
There is this, excuse me. There's this textbook called Oil and Gas Accounting, split into two. One is for drilling and exploration, and then the other part is for production and operations. It's very helpful because it breaks down everything that Vikrant has explained, all the operational and technical things he's explained. It breaks it down, and then you can read it and understand it. So I could share those two textbooks with everyone. So whenever you have any questions, you can refer to the textbooks. Or if it's not there, Chinonso's already sent out the email that has the documents, but I'll remember. I'll just reply her email and put those two textbooks in there.
Okay.
Yeah. Right. Okay. Yeah, that's what I wanted to add.
All right. So I conclude our first session. Anything else that we want to talk about?
Any questions? None. All right. That means Vikrant did a very great job in breaking down these concepts and training us. So thank you, Vikrant. Thank you for your time.
You're welcome.
Thank you.
Sorry, Mr. Now, will this training, are we going to be learning how to upload, like to do some uploads and all that?
No, we won't be doing uploads in these sessions.
But are we going to have it during the course of this training?
No, we won't be looking at uploads during this training.
Alrighty. So, Vikrant, do you want to walk us through the 4 areas that we're going to be discussing during the training?
Yes.
I know you
so-
mentioned it at the beginning, but you can mention it again so we're all on the same page.
Sure. So today we talked about okay, so today we did general Wolfpack, our general ledger, balance sheet, chart of accounts, how to access help within Wolfpack, how to get set up Wolfpack setup, and what do we mean when we say different things like WPPML, Wolfpack code, API, well groups, field. So today was a basic introduction. Next week, and we also looked at journal ledger, how to dive deeper into any particular journal ledger entry. So now next week, we will be talking more about accounts payable, your vendor invoices, how to pull data for a particular vendor for a time duration, and your vendor reports. I feel like we already did the second session also to some extent, but we will dive more into more detail into that and also look at vendor reports. And in the next session is where what Bhavesh does for us will come more in handy, like how he pulls statements for different vendors, check statuses of their payments, whether we have invoices and all that, and so on. So next week will be everything accounts payable, everything vendors, and so on. And then the third session will be everything, the revenue and billing module, everything on the owner level, your revenue distribution, your joint interest billings, your division of interest, and all those things. So by the time we get to the third session, it will be good that everyone, I know you guys just had a training, but it will be good that by our third session, everyone is familiar with what is NRI, what is working interest, what is royalty interest, and all those things that you had discussed in your training earlier this week. And then the last module.
I'm sorry, Urvishta wasn't part of the training, so I would share the recorded video. Bhavesh, I'll share the recorded video. And I know Chinensis had the training like last year, mid last year, so you can also go through it to refresh yourself on it. All right. Yeah, sorry, Vikrant. Go ahead.
And then the fourth module will be your AFE module, which is your authority for expenditure. If you're not familiar with what it means, we'll do the whole thing. And for the AFE module, we will invite Samuel also. So Andela, please, for the fourth Wolfpack training session, please forward the meeting invitation to Samuel as well. Yeah, so to answer your question, Chinonso, this is for all our staff members to be able to use Wolfpack, get the necessary information out of it, and be familiar with all our jargons. What you talked about is gets more technical within accounting. So we'll leave that out for now because everyone won't even need it. It's specific to only to some staff members. So we won't be discussing that. Okay. Anything else for me? You're on mute, Jumansi.
I sent you some
Yeah.
WhatsApp. Probably you could help me attend to it.
Okay, I'll look into it.
Alrighty, awesome. So Hamdallah, you have the task to send out training 3 and training 4 invites. We'll be expecting what Vikrant said he was going to share with us so that between now and our next training, you can go back and revise what you learned today on Wolfpack, get your Wolfpack account set up, etc., etc. All right. In the absence of questions, I think we can conclude the training. Vic.
All right. Bhavesh, I'm making you an editor on a YouTube account and you can be uploading all these videos there.
Okay, I will upload it.
Please send me your Google email address on WhatsApp.
Okay.
All right, then. Thank you everyone for joining and for listening to me. Have a great rest of your week. And don't forget to have fun.
Thank you very much.
Fun minister.
Yeah. All right. Bye, guys.
All right, guys. Bye.
Bye.